You're about halfway through the trading day here in New York, and it's time for a quick reset. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to bring a little clarity through the chaos in the midday tape. The standout headline this hour is Political meets Financial. According to reporting from MarketWatch, hedge fund billionaire Ray Dalio is among the latest deep-pocketed names, pledging money towards SUA called Trump Accounts for Kids, a proposed investment account program for American children that's expected to launch in 2026. There's no direct market impact yet, but traders are already thinking down the road about what a government-backed, nationally promoted investing vehicle for minors could mean for flows into broad equity ETFs, financial firms that might administer these accounts, and the broader culture around long-term investing. On the regulatory side, another MarketWatch piece that's drawing attention looks at a proposed Trump administration change to rules that currently bar lenders from requiring women to have a male cosigner on loans. Consumer advocates quoted in that article are calling the potential rollback alarming and a step backward. For markets, anything that stirs up concern about fair lending practices can put a spotlight on the banking sector and on large consumer lenders. Professionals will be watching whether this stays a political story or turns into a reputational and regulatory risk theme for specific financial names. In the background, there's a strong undercurrent of household finance anxiety in today's news flow. One widely read column on MarketWatch features a 76-year-old still working with only about $100,000 saved, and a real fear of homelessness if the paychecks stop. Another story walks through someone with over $6 million in stocks, heavily concentrated in Apple, worried about taxes and diversification. When you add in pieces about 401k plans, pushing annuities, and advice to older parents on whether to start giving money to adult kids now, you get a picture of a market where investors at every wealth level are thinking hard about security, longevity risk, and how much risk they can actually stomach. Those personal finance stories may not move tickers on their own, but they feed into the sentiment professionals track. Are people feeling secure enough to stay in equities, or are they inching toward more guaranteed income products like annuities? Like annuities? That question gets even more interesting when you overlay it with new proposals like the Trump Accounts for Kids, which could encourage earlier and broader engagement with the stock market for the next generation. In sector terms, one quiet but important theme to watch this afternoon is in healthcare. MarketWatch is highlighting that Eli Lilly and Novo Nordisk have both filed new, next-generation weight loss drugs with the FDA, potential game-changers in obesity medicine that differ from current blockbusters like Wegovy and Zepbound. Obesity and metabolic treatment has been one of the defining growth stories of the last couple of years, and any sign of a new competitive wave, new side effect profiles, or better efficacy can shift how traders value not only these pharma leaders, but also adjacent industries like food, beverages, fitness, and medical devices. Over in tech-enabled transportation, Bernstein analysts, as reported by MarketWatch, argue that Uber's stock is trading near historically cheap levels because investors may be overestimating the existential threat from robotaxis and fully autonomous vehicles. The core debate there is timing. Does autonomy arrive fast enough and broadly enough to undercut the ride-hailing model, or does it end up being a tool that platforms like Uber license and integrate? That narrative can add some volatility in mobility and adjacent names this afternoon as traders weigh price risk around autonomy timelines. Into the next hour, I'll be watching three things. First, any follow-up detail or political reaction around the Trump Accounts proposal, because that will shape how seriously markets treat this as a future flow story. Second, whether the regulatory lending story starts to show up in price action for big consumer banks. And third, how healthcare and mobility names trade on the back of the obesity drug filings and the renewed robotaxi debate. We'll be back with more intraday updates and of course a full closing bell wrap later today to connect these headlines to how the major indices actually finish the session. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,